So if you've been watching for a while, you know that there's a lot of different reasons why refinancing your property might make sense. But I had a client just recently that came to me to refinance in order to obtain some money to do some home improvements on their property. And we were able to get them the money for these home improvements, and their mortgage payment only ended up going up $30, and they received over $20,000 in cash out. So in this lesson today, I want to give you all the details on exactly how we did this. This is Robert Weinberg, and on this channel we help people to take control of their future through expert mortgage and financial strategies. If it's your first time here, please go ahead and hit the subscribe button. Also click the bell so you get notified on all of our future content. So in this lesson today, I want to talk to you about the details on how I was able to help a client get over $20,000 in cash out for home improvements while barely increasing their mortgage payment at all. So this particular client worked with me before. About a year ago, we refinanced their home and we got them out of their FHA mortgage that they bought the house with, and we put them into a conventional mortgage. We got rid of their PMI, and we were able to drop their payment at that time about $250 a month based on what they were paying previously. So their payment was $2,800 a month. That's what they were used to paying. But they were in a situation where they were going to be potentially moving in the next couple of years. And they needed $20,000 in order to do some improvements on the home to bring it up to speed and make it an attractive home that a buyer would want to purchase. But they didn't have the money just at the ready, and they didn't want to use credit cards or another form of debt. So they came to me to look at some potential refinancing options. And what we were able to do is, because of the reduction in rates over the last year, we were able to drop their interest rate. We got them down from a 4.75% rate and dropped it down to 4.5%. And they owe almost $400,000 on their home. So it was a substantial differential as far as the payment goes. Now, even after accounting for the additional cash out and the closing costs and everything out the door, their payment went from that $2,800 a month before, and after, their new payment is only $2,830. So really, it ended up costing them $30 a month on their mortgage payment, and they received over $20,000 in cash out. It was like $20,800 and change that they received in cash out. The other cool part is there were absolutely no out-of-pocket expenses to this client at all for the refinance. Because we had done a conventional mortgage a year ago and their property value and the area that they're in has appreciated a bit, so Fannie Mae didn't require any appraisal on this at all. We got a property inspection waiver, which for most people refinancing, an appraisal is going to be the main, if not the only out-of-pocket expense, and an appraisal usually can run anywhere from $400 to $600, just depending on the type of property and the type of appraisal that you're having done. But for this client, we were able to get it done with no appraisal. So this entire process, from the day that they applied for the refinance until they closed, it was literally 3 weeks from start to finish to the day of their closing. So the time frame was great. So like I said, no out-of-pocket expense at all for the entire refinance. And their first payment's not due until January of 2020, and they closed in November. So they have this timeline where they don't have a mortgage payment due, which is helping them out to have some extra money for the holidays and New Year and whatnot, so they don't have to go further into debt. And then also, they are getting the entire escrow account back from their current loan, because we're setting up a new escrow account on this refinance as part of the closing costs rolled into the new loan. So they're getting a check back for over $3,000 from their current, or at this point, their previous mortgage servicer, because their previous mortgage servicer was planning on paying their property taxes and insurance out of that escrow account. But because they paid that loan off and set up a new escrow account, they now have this $3,000 plus that'll be in their possession within 30 days of closing. So between the mortgage payment not being there for a month and also having that $3,000 back, they're having almost $6,000 that they can have at their disposal for whatever they want. This particular client is using it to pay down some credit card debt that they had and shore up their savings for the future. So you can see, not only did they get the money for the improvements that they needed, but they were able to really help their overall financial situation with these couple other sums of cash that they came into. I hope that this has been of value to you. I hope you see how a cash out refinance can help you or someone you know with the needs that they may have going into 2020 and beyond. You can follow me on social media on all my channels for more financial insight and mortgage strategies. And as always, you can call or text my office directly if I can be of assistance to you or anyone that you know. Thanks for watching, and we'll talk to you soon.